Everyone, and welcome back to Forex Scope. I'm thrilled to have you join me today as we dive into the exciting world of gold analysis. Whether you're a seasoned trader or just starting out, you're in the right place. Today, we'll be taking a close look at gold's movements on the 15-minute and even the 1-minute timeframes, so we can uncover some potential trading opportunities. If you're looking for clear insights, actionable signals, and a glimpse into future price trends, make sure you hit that subscribe button and turn on notifications. You won't want to miss what's coming up. Let's get started. The support zone is identified between the timestamps 176-293-9800 and 176-294-0700. In this period, the price experienced a notable consolidation and a retest of a prior low. The lowest point reached during this interval was approximately 4,120.568, while the highest point was around 4,129.735. This area shows clear price action characteristics of accumulation, where buyers stepped in multiple times, preventing further downward movement and indicating a potential floor. The multiple touches and the sideways movement suggest a strong demand zone. The significant volume accompanying these candles further validates this area as a key support. Traders often look for such patterns to identify potential reversals or areas where buying pressure is likely to emerge, creating a stable base for price to build upon. This zone represents a price level where a substantial number of orders were likely placed, absorbing selling pressure. The resistance zone is identified between the timestamps 176-290-4700 and 176-290-5600. During this period, the price approached a significant overhead level, showing clear signs of selling pressure and an inability to break higher. The highest price reached in this vicinity was approximately 4,145.524, while the lowest point observed was around 4,139.0. This area demonstrates a period of strong resistance where sellers became dominant, pushing the price back down. The repeated attempts to move higher and the subsequent rejections suggest that there was a significant concentration of sell orders at these price levels. The formation of bearish candles with upper wicks indicates that buyers were unable to sustain the upward momentum, and sellers were actively defending this price range. This price action points to a supply zone where profit-taking or new short positions are likely initiated, creating a ceiling for the price. The accumulation of these price points signifies a level where upward progress is consistently halted. The resistance zone is identified between 4,137.673 and 4,137.319. This area shows a significant price rejection where the price attempted to move higher but was met with strong selling pressure, pushing it back down. Specifically, the candle ending at 176-295-0360 reached a high of 4,137.319, immediately following a high of 4,135.051 at 176-295-0300, indicating a struggle to break through this level. The subsequent sharp decline from the high of 4,137.319 suggests that this price range acted as a ceiling, repelling further upward movement. This zone represents a prior area of high supply where sellers became more aggressive, preventing the price from sustaining higher levels and leading to a significant pullback. The price action here clearly demonstrates sellers stepping in to defend this price range. The support zone is identified between 4,123.388 and 4,123.062. This area previously acted as a floor where the price found buying interest and bounced higher. The candles within this range, specifically the one ending at 176-294-6640 with a low of 4,124.890 and the prior one ending at 176-294-6580 with a low of 4,123.388, show the price struggling to break below this level. There was a clear indication of buyers stepping in to absorb the selling pressure, causing the price to reverse upwards. The presence of significant lower wicks within this price band highlights the demand at these levels. This zone represents an area where buyers were aggressive enough to halt the downward trend and initiate an upward movement, signifying a strong area of interest for potential future buying activity. The repeated testing and inability to decisively break below this level reinforce its significance as a support. The market is currently showing signs of consolidation around the support level of 4,126.126, as evidenced by the price action between 176-294-8140 and 176-295-0300 and the Fibonacci levels. The recent upward movement from the support at 4,123.062 suggests a potential continuation of the bullish momentum. The resistance at 4,137.319 to 4,137.673 has been tested multiple times, and a break above this level could lead to a further ascent. The next key resistance to watch would be around 4140.0, aligning with previous highs. After a potential test of this resistance, a minor pullback is anticipated before a stronger push towards higher targets. The presence of higher highs and higher lows in the 1-minute chart, combined with the bullish engulfing patterns near support, indicates that buyers are gaining control. The Bollinger Bands are starting to widen, suggesting increasing volatility and a potential trend change. The tick volume in the recent candles shows periods of increased activity, especially during upward price movements, further confirming buyer interest. Considering the established uptrend on the 15-minute chart, it's reasonable to expect the price to retest and potentially break through significant resistance levels, leading to a zigzag pattern of upward movements followed by minor corrections. The strategy here is to anticipate these waves, riding the upward momentum while being mindful of potential profit-taking zones. The Fibonacci retracement levels also provide crucial insights into potential reversal points within this uptrend. The current price is hovering above the middle Bollinger Band, which often acts as a dynamic support or resistance. A sustained move above this band would further strengthen the bullish outlook. The overall sentiment leans towards an upward continuation, but with necessary pullbacks to form a healthy market structure for further growth. Traders should look for entry points on pullbacks towards support levels or on breakouts above key resistance zones. The predictive path aims to capture these upward swings, creating opportunities for traders to capitalize on the market's upward trajectory.